giving in a second. All right. Good morning again. Welcome to the Office of Tax Appeals. We're here for the hearing and the claim of Directv, Inc., which is Office of Tax Appeals, or OTA, case number 2009-6628. Today is February 16th, 2023, and the time is 1:11 p.m. This hearing is being heard in Cerritos, California by a panel of 3 of OTA's administrative law judges. As a reminder, OTA is not a court. It is an independent tribunal staffed by tax experts and is completely independent of the state's taxing agencies. My name is Michael Geary. I will take the lead in conducting the hearing today, and I am joined on the panel by administrative law judges Joshua Aldrich and Osep Akopchikian. After the hearing, the 3 of us will discuss the arguments and evidence, and each of us will have an equal voice in those discussions. A decision on any issue is made when at least 2 of us agree. Any of us on the panel today may ask questions or otherwise participate in today's hearing to ensure that we have all the information needed to correctly decide this appeal. Consistent with OTA's goals to be completely open and transparent, today's hearing can be seen and heard in its entirety on OTA's YouTube channel. In addition, our stenographer, Ms. Mosky, is going to help us make a record of this hearing, and we will all help Ms. Mosky do her job by speaking loudly and clearly, by not interrupting another speaker, and speaking slowly so that she can get all of the words correctly. Ms. Mosky, or perhaps one of us on the dais, may remind you or ask you for clarification if you start speaking too fast or if we cannot hear what you are saying. The YouTube recording of the hearing will remain available to be viewed online for some period of time, and eventually a written transcript of this hearing will be available on OTA's website. Ms. Mosky, please go on the record. Will the parties please identify themselves by stating their names, who they represent, and to the extent they want titles represented or indicated on our opinion, that also starting with appellants.
Wade Downey with Downey Smith and Fire, representing Directv, Inc.
Steve Bixler with Downey Smith and Fire, representing Directv, Inc.
Jose Manzano with AT&T, representing Directv.
Thank you. And the CDTFA, please.
Jarrett Noble, representing CDTFA.
Scott Claremont, representing CDTFA.
And Jason Parker with CDTFA.
Thank you. It's my understanding that appellants will be calling Mr. Manzano to testify today. Is that correct?
Yes, that is correct.
And I take it, Mr. Downey, you'll be doing most of the presentation today?
I'll present issue 1. Steve will present issue 2. And then Jose, I'll probably issue 3, and then Jose will be in between issue 2 and 3.
Okay. Respondent, do you plan to call any witnesses today?
No, sir.
The exhibits marked for identification in this appeal consist of appellant's exhibits marked 1 through 18 for identification and respondent's exhibits marked A through H for identification. The parties have provided copies of the exhibits to each other and to OTA. They've had plenty of time to consider the information. Does respondent have any objection to the admission of appellant's exhibits 1 through 18?
No, we do not. Thank you.
Thank you. Does appellant have any objection to the admission of respondent's exhibits A through H?
Yes, there's a couple of schedules in Exhibit A that need to be clarified by the department, I guess, or I can clarify it.
Go ahead and explain what you mean.
You know what, I don't want to misrepresent. I don't think I have it right in front of me, so.
I think it's Exhibit A, pages 315 to 316. It appears to be an audit schedule, and there's a date on the audit schedule that indicates this was provided in 2016. That's not correct. the comments that were the Exhibit A, that particular Exhibit A was provided for, were created in September of 2019. The department staff at the time used the schedule from the audit as an example and then wrote their comments, and it was provided in response during the department's own internal appeals process. So just wanted to clarify that Exhibit A, pages 315 to 316, was not created contemporaneous with the audit. It was after.
All right. Does that satisfy appellant as far as the clarification is concerned?
Yeah, the only thing I would add is that Mr. Manzano will testify as to the content of the document. Some of the statements aren't consistent or accurate with the business
That doesn't go to
practice, so-
admissibility. Do you have any
Yeah.
objections to the
No.
admission?
Perfect.
All right. Then all of the exhibits of both parties are admitted. We've had some discussion about the issues that are being presented in this hearing for consideration by the panel, and I believe we have an agreement that the issues are as follows. One, did respondent incorrectly offset time-barred state or district taxes for the period April 1, 2006 through December 31, 2011? Issue 2, is appellant entitled to credit interest on the refund granted for the period April 1, 2006 through December 31st, 2011? And 3, is appellant entitled to credit interest on the refund granted for the fourth quarter of 2011? That claim and that refund are not at issue here, but only appellant's entitlement to credit interest. Mr. Downey, do you agree with that those are the issues we will be addressing?
Issue 1 and Issue 2 commence January 1, 2006, not April. So the copy I have, one says July and one says January, so both of them should be January. January through December 31st, 11.
All right, I've made those changes. Mr. Noble, any disagreement that those periods are supposed to run from January 1?
No, sir.
Thank you. Time estimates, as we discussed in our pre-hearing conference, it was agreed that appellant would have approximately 45 minutes for its opening argument and its examination of the witness, Mr. Manzano. Let me ask, because there's been some discussion, Mr. Downey, about who will be speaking and when. I take it you have an idea in mind for structuring appellant's presentation. Tell me what that structure will be.
Yeah, so the target is 20 minutes to present Issue 1, and then 5 to 10 minutes for Issue 2, 5 to 10 minutes for Manzano, and then a couple of minutes for Issue 3.
All right, so I take it then you are going to be providing, there's going to be argument provided first and then the testimony from Mr. Manzano,
Correct.
with no testimony to follow the testimony of Mr. Manzano, or no argument by appellant following the testimony of Mr. Manzano.
Correct.
All right. Then, and Mr. Bixler is going to do Issue 2?
Correct.
You let me know when you're ready to call Mr. Manzano. I will administer an oath or affirmation to him at that time, okay?
Okay.
All right.
And when we go to present Issue 2, we're going to switch the charts, so.
All right, that's fine. At the conclusion of Mr. Manzano's testimony then, which will include opportunities for both respondent and members of the panel to ask questions, we'll have appellant's argument, we'll have respondent's argument, and I believe respondent requested and was granted approximately 25 minutes for its argument. And following, is that correct, Mr. Noble?
I believe so. Thank you.
Thank you. And then following respondent's argument, appellant will have an opportunity for a brief rebuttal, if it chooses to take that opportunity, of approximately 5 minutes. If any party finds that they need additional time, if it's more than a minute or two, try to let me know in advance so I can take that into consideration. Appellants, any questions before we go on the record and begin?
No.
Or already on the record, excuse me. Appellants, you may proceed when you're ready.
Perfect. Wade Downey, partner with Downey Smith & Fire, representing the appellant, Directv. Thank you for the opportunity to present our appeal. We look forward to this panel's independent review of the issues and statutory authority applied in the supplemental decision, as the decision is not consistent with the statute and misinterprets the authority. As information and separate from the issues being decided here, we've asked the Taxpayers' Rights Bureau to listen to this appeal and to review the complete record, to address potential violations of the taxpayers' rights in adherence to the department's audit policies and regulatory requirements. Issue 1. We'd like to first review the facts. The CDTFA prepared and issued an audit report based on an open statute. The statute expired prior to being billed. No changes were made to the audit report or verification comments based on the closed statute. The department asserts that California Revenue and Taxation Code, Section or Chapter 5, Determinations, Article 2, Deficiency Determinations, Section 6483, Offsets, allows the CDTFA or department to issue deficiency determinations for time-barred periods. This conclusion is flawed as it misrepresents the language in the statute and ignores the protections provided by Section 6487, the limitation period. Section 6483 states, in making a determination, that is a deficiency determination. And let me stop there, because every period in this audit was time-barred when, under Section 6487, the waivers extending the limitation periods expired, all 9 of them. Furthermore, the supplemental decision concludes that the fiduciary role of the CDTFA with respect to administering the separately imposed taxes through a single notice of determination voids the fact that the periods are time-barred. The decision then asserts that California Revenue and Taxation Code 6483 allows offsets to unrelated tax authorities that have adopted their own statutes and ordinance. This is contrary to the requirement that each tax authority must adopt separate ordinance equivalent to the referenced California state statutes. Nowhere in the California statutes or each district tax authority statute does it provide for the commingling or offset between these separately imposed taxes. This flawed logic in the supplemental opinion then leads to the conclusion that annotation 802.0090 was incorrect. The CDTFA has deleted the annotation, but the annotations supporting opinion are worthy of review by this panel and are insightful and provide comprehensive analysis of the construction of these statutes and the sales and use tax system. Our Exhibit 12 provides a comprehensive list of the annotation, including the deletion information. We would also point out the fact that there have been no changes in the imposition of these taxes, no changes in the CDTFA's contracting and fiduciary responsibility to the special district authorities, and there has been no change in the methods of issuing notice of determination since these rulings were issued. The underlining letters provide a comprehensive legal analysis that is still applicable today. For the record, I'd like to read an excerpt from Gary Jugham's 1995 memorandum. For the younger crowd, Gary was a Harvard grad, was the BOE attorney advising the former Board of Equalization during the time when I served as a sergeant in arms. He was arguably one of the most knowledgeable attorneys to work for the board and a pioneer in California sales and use tax policy, so his words should not be diminished or easily dismissed. I quote, "District taxes are in the nature of trust fund taxes which the board administers on behalf of each levying district. Each fund must therefore be specifically administered for the benefit of the entity imposing the tax. Any use of one agency's fund for the benefit of another agency would be a breach of this fiduciary duty and could make the board liable to suit. More importantly, the board administers and enforces each district's tax under a contract executed between the board and the district, Section 7270. The board is thus subject to a fiduciary duty of good faith and fair dealings to ensure that the districts get the revenue properly due, while at the same time preserving the economic advantage to the district of having its taxes administered by the state, end quote. When the CDTFA failed to issue timely determinations for the 125 separately imposed district tax authorities that they allowed the waiver to expire, and they alone failed to fulfill their contract. It is disingenuous now to claim that as long as we redistribute the revenue, everything is fine. We've done our job. That is not how it should work. That is not acceptable administration on behalf of these taxing authorities that contracted with the state. Neither Sprint nor the state statute 6483 support commingling of offsets between separately imposed taxes. Throughout the appeals process and after our claim was filed, the department has attempted to dismiss, delete, and conclude that Gary's underlining opinion and the legal analysis is not applicable or valid, as it only addresses interest or the reverse of Sprint. The hearing officer, in her initial opinion granting the refund, concluded the following, and I quote, "We find unpersuasive BTFD's argument that annotation 8020090 does not apply here because the facts considered in the annotation are reversed from the facts of Sprint. The annotation is not distinguishable on the basis given that its findings apply equally here, where the BTFD offset one taxing jurisdiction's tax against another entity's tax," end quote. The department's OTA brief makes a statement that the appellant appears to argue that the CDTFA is required to issue a single notice of determination for each local or district taxes. Let us be clear. We don't care how the CDTFA bills tax that is due. We just want to ensure that they have a legal basis to do so. Okay, now we'll review the audit specifics. The audit of Directv started in 2009 and covered a period of January 1, 2006 through December 31st, 2011. During the audit, Directv cooperated fully to address the issues and even performed a managed audit for a portion. From September 2009 to June 2016, Directv executed 9 waivers of limitation, extending the time allowed for the CDTFA to complete its work. The extensions ranged from 2 years to as little as 1 month, the final extension. And every request for extension or additional time was granted by the taxpayer. The audit was completed by the Culver City District Office in June 2016, reviewed and approved by the district reviewer for accuracy, and transmitted to headquarters for billing in early July 2016. The audit included 2 claims for refunds covering the periods January 1, 2006 to June 30th, 2006, we'll refer to as Claim 1, and July 1, 2006 through December 31st, 2011, Claim 2. There was a third overpayment and unapplied credit handled by headquarters where the prepayments exceeded the final tax due on their return. Once the audit report was received by the Audit Determination and Refund Section in Sacramento, they delayed and did not issue the Notice of Determination until September 28th, which was 28 days after the waiver extending the statute expired. At that time, the entire audit period was time barred. As a former auditor, representative of clients for the last 30 years, this represents a mammoth event, especially considering the sizable underpayments that were identified in this audit. So let us think about it for a second. Once the statute expires and every period is time barred, there is no longer one audit period, as the audit report indicates. Rather, there becomes 2 separate claims for refunds, independent of each other. Now, we acknowledge and do not dispute that Sprint must be considered thereafter by applying the requirements of the limitations established in the Audit Manual Section 434.00 and 30, we've provided a complete copy of the audit manual section in Exhibit 11. The current copy on the CDTFA website is not accurate, so one of the charts is misplaced. So the department purports that they were aware that the statute expired before the notice was issued, but their actions indicate otherwise. Did they update the audit report or comments based on the expired statute? No. Did they separate the claim results or prepare offset schedules as required by the audit manual? The application of overpayments to expired liabilities within a claim period? No. Did they review the audit report, or did they return the audit report to the district to update the report or evaluate impact? No. Did they have any reviewer look at the impact? No. Did they notify the taxpayer? No. Did they notify us? No. Did they document anything, anywhere, in the report to reflect this significant change and potential impact? No. They proceeded to issue the notice of determination unchanged. Now, in all fairness, an August 31st waiver extension is an odd date. Generally, they expire at the end of the quarter. So, in all fairness, we want to believe that they were unaware that the statute expired. Okay? Otherwise, if the department was aware that the statute expired and proceeded ignoring the substantial change, they would have been a deliberate violation of the taxpayer's rights to receive an accurate audit report and an explanation of its basis. Upon receipt of the final notice, I immediately contacted Steve Sisti in the audit determination section to discuss the fact that the notice was not timely and the statute period had expired. Based on the conversation and the non-response, Directv filed its December 2nd, 2016 claim for refund. For a little over 2 years, the department ignored our follow-up and the claim. If you review our Exhibit 7, it provides a comprehensive list of the contacts that we had with the department and the progress that this took. In December 2018, the department issued a 2-sentence response attached as Exhibit 9, and I quote, "We believe the amounts determined in the notice of determination are correct. Our position is that your claim for refund should be denied." The taxpayer immediately sought clarification. And the department issued a supplemental response on January 22nd, 2019. Copies also included with Exhibit 9. And I quote, "A review of the work papers disclosed that they were prepared according to the guidance provided by Audit Manual Section 43400 through 43432 and the Sprint decision. Oh, in addition, because the audit was transmitted while the periods were within the statute, there was not a need to address the circumstances outlined in Sprint case at issue." The statements conflict. The audit report clearly did not address Sprint. There's not a single comment related to Sprint or any offset or other verification or schedules. Since the audit report was prepared and reviewed based on the open waiver and open statute, there would have not been a need, so this is not a surprise. The transmit date is irrelevant. Furthermore, what is frustrating is that the department throughout this appeal has not acknowledged the change or presented a single supplemental analysis schedule to address Sprint. The periods are time barred, and Sprint must be considered. And there are limitations related to allowable offsets, especially when there's multiple claims, as the case here, and when there's multiple tax authorities. We've provided Exhibit 1 and Exhibit 2, and maybe we can turn to those. Let me get my computer to come back on. So we've provided Exhibit 1 and Exhibit 2 to illustrate the allowable offsets and limitation when Sprint is applied consistent with the audit manual. Directv does not dispute the holding of Sprint, and we never have. Exhibits 1 and 2, and it's the blue arrows on our diagrams with the A's, identified tax due and allowable offsets, nearly $9.9 million of state tax, $1.8 million of local and county tax, and over $950,000 of Los Angeles County Transportation and Metro Authority. These amounts represent the totals from the tax due row on the exhibit. So if you total up across the row, you will be able to get to those numbers. Okay? The issue involves two components: the aggregation of two state claims resulting in a net refund paid, and ignoring the separate imposition and ordinance adopted by each special district tax authority that have a statute of limitation equivalent 6487 provision. Exhibit 2 demonstrates how Sprint applies to the state tax claim, or our state tax overpayment. DirecTV's claim for July 1 through 2006 through December 31st, 2007 resulted in a deficiency that would have been limited to zero. The deficiency should not have been netted with Claim 1 for the first 2 quarters of 2006. So you can see at the bottom of the diagram, there's a gray arrow with an X. The liability on the right side of the diagram can't be applied to reduce the refund on the left side. Those are separate claims. They are separate state claims. The right side is time barred. The CDTFA's Exhibit C shows a state tax refund of $813,000 was paid for both claim periods as part of the September 28th notice. Sorry, I apologize about that. The schedules net the 2 periods. Audit Manual Section 0434.30 on the top of the diagram clearly states that each claim period must be treated separate. The overpayment from Claim 1, 892, should have been paid, and the Claim 2 deficiency should have been time barred or limited to zero, as offsets can only be applied to debits using credits within the same claim period. There are 2 columns, just for clarification, there's 2 columns on the right side, and that represents the 6% rate and then the period of time where the state rate was 7%. So both of these are state tax, and they should be aggregated when considering the offset. So we've also applied another offset at the bottom to say, here's another amount of state tax that should not be refunded because of tax due. If we turn to Exhibit 1, Exhibit 1 examines the audit results with respect to each separate district tax authority. Open that exhibit. Page 1 provides a visual illustration of the Claim 2 results with an example for one of the time bar deficiencies issued on behalf of CCTA, the red box. There are another 124 of these districts where an assessment was issued. The green columns represents the overpayment that was approved for the Los Angeles County Transportation Commission, 2.5%, and the Los Angeles County Metro Transit Authority, 1. Again, the blue arrows, similar to the state analysis, show the appropriate offsets that are not disputed, and the gray with an X illustrates offsets not supported by the statute. The approved refund after allowable Sprint offsets is $955,718. You can see this on page 2 of the exhibit in the last column, and it represents 3 overpayments that were illustrated in the green squares on page 1. On the top left of the schedule is the amount of district tax refund that was paid of $685,122. And then in the bottom on the right, you can see the $403,870 of district tax assessments unrelated to our refund that were reduced or that were billed under deficiency determinations. So the entire Claim 2 period has not been paid. The remaining pages of the exhibit, if you click, provide a sprint analysis to each and every one of the districts, with the final column representing the tax deficiency that was issued by the state, with the total representing the $400,000 at issue in this appeal. In closing, we recognize that this presentation included too much detail. But that is what is required when all periods become otherwise time-barred and sprint must be applied. The department, throughout the appeal, has claimed that 6483, the state statute, allows them to aggregate all results, which masks the sprint issues that we just reviewed. The department's request for reconsideration issued after the claim was initially granted and resulted in the misinterpretation of the statute in the supplemental decision, Exhibit 6, and I quote, "Simply put, the CDTFA may and does offset a taxpayer's overpayment and underpayments among different taxing programs as long as the revenues are redistributed. This statement may be true if the periods are open under the statute of limitation. But that is not the case here, as the department has allowed the waiver to expire. Thus, the need for offset schedules to apply sprint, which has not been done. The unpaid refunds due from the state portion on Exhibit 2 and the Los Angeles County on Exhibit 1 should be granted." Okay, so are there any questions on these charts or what's illustrated there at this point? Or do you want us just to continue?
I would like you just to continue, please.
Okay, so.
Is that a part two?
Yep.
Mr. Downey, did you want to change the exhibits out? Did you say you were going to, or not the exhibits, but the...
Perfect, thank you.
So regarding the denial of credit interest, Directv strongly believes that credit interest should be allowed, as the overpayments were not similar to those documented in prior audits, and the CDTFA has not satisfied the requirements for carelessness under the amended regulation 1703. The CDTFA's basis for denying credit interest has evolved during this appeals process. The initial general audit comments, Schedule 414A P6, provided that credit interest is not recommended because the current tax refund is attributable to the similar refund errors that the taxpayer incurred during the prior audit. In addition to the recurrence of similar errors, the frequencies and the volume of the errors multiplied nearly 3 times the errors in the prior audit. And we'll address those comments shortly. And then during the appeal, the auditor prepared additional comments submitted as Attachment 3, Support for Credit Interest Denial, which is pages 315 to 316 of Respondent's Exhibit A, and also the document discussed at the beginning regarding the misstating of the schedule. The comments were prepared more than 3 years after the audit completion, as previously mentioned, and we'll have Jose Manzano testify regarding their accuracy. The auditor also referenced annotations 320.0047 dated 4/12 of 94 and 320.0050 dated June 2nd of 78 in support of her denial. The appeals conference decision concluded, "We find from the above that claimants' overpayments at issue were the result of recurring clerical or computational errors or repeated errors in similar transactions, which claimant failed to correct in successive quarters. Thus, we find the overpayments were the result of carelessness, and claimant is not entitled to credit interest. Now, this decision appears to rely on the annotation 320.0047 provided by the auditor to deny credit interest. The opinion states failure to correct overpayments in successive quarters, consistent with the annotation. However, the annotation was created in '94 prior to the amendments to the credit interest regulations that established a definition of carelessness and established two requirements. At that time, the annotation was written, notification was not a requirement. The appeal decision does not address the written notification requirement in the revised definition of carelessness. The department, in its March 18th, 2022 OTA reply brief, asserts that notification was provided on or about April 7th, 2004, as part of the results of the prior audit of 97 to 2000. Now, Downey Smith and Fire was also DirecTV's representative during this 97 to 2000 audit period. In the review of the audit comments related to credit interest, there was no written or discussion related to denial of credit interest for future audit periods. The auditor's actual comments state that the comments, or that the taxpayer had instituted changes to prevent future errors of the same type, which they did. Furthermore, the notification conclusion or treatment of this audit period as notification is inconsistent with the treatment of the subsequent refund audit periods of 10/1/2000 to 12/31/2005, and also an FBO for the period of 1/1/2006 through 6/30/2007, where credit interest was also allowed. Both claims were processed after the alleged notice to the taxpayer on April 7th of 2004. Now, presumably, the amendments to Regulation 1703, establishing a clear definition of carelessness, including the written notification, was to make it clear and obvious to the taxpayer that a credit interest would no longer be granted on similar errors in subsequent periods. And we believe the department has not satisfied both requirements to conclude that overpayments were the result of carelessness. As it relates to the second prong, similar and recurring errors, this has been DirecTV's main focus during the appeals process, and we've provided significant support, which are part of the record. DirecTV, we're not going to get into the details there, but the exhibits are included. DirecTV continues to disagree with the conclusion that the overpayments are recurring or similar to prior audit periods. Now, yes, all of DirecTV's audits will and continue to include use tax overpayments, just based on the volume and the complexity of their business. That's just a fact and common for most businesses. But the fact that there's a use tax overpayment alone is not support enough to establish that such overpayment is similar and recurring. DirecTV reports use tax from many different systems and sources. Now, if you look at Exhibit 16, it's a breakdown between the prior audit, 2000 to 2005. And you can see at the beginning of the audit period for 2006, there was a large spike, and that related to a single software license purchase. And as we know, software, especially during this time, could be a difficult type of purchase to understand whether tax applies to that transaction or not. Ultimately, they had accrued conservatively, and it ultimately was determined it was not subject to tax. And then you can see that their compliance drops way back down and is very good. And then around, looks about the second quarter or so of 2008, they've implemented a new system, and the system was intended to try to automate use tax accruals, and Jose can touch on this in a little bit more detail, based on GL decisions in order to improve their compliance and their efficiency in accruing use tax. And then you could see, and of course, when you implement a new system, there's going to be some hiccups along the way. And obviously there were. But you can see the downward trend from when the new system was implemented you can see that there's steady improvement with respect to the overpayments. And finally, credit interest is calculated on net refund results. And now the chart that's in front of you is actually a visual display of Exhibit 15. And what that points out is DirecTV's audit history along the way, beginning from 97 through the 2011 audit period. And the trends you can see or in the most immediate, well, going back to the auditor's comment that the refund was 3 times the size of the 00 to 05 audit period, you can clearly see that it had gone down from that period, and it was actually about a third or 70% less of the overpayments in the prior audit period. The other thing to note from this chart is the significant growth that DirecTV experienced over this audit period. You can see that from the 97 to 2000 period, there was approximately 30 million of taxable California measure. And from that point to this this audit period at issue, the total taxable measure had gone up to 1.5 billion. Now that's exponential growth. And that's obviously when a business grows that fast, they're going to be mistakes both ways, and but compliance was definitely a high priority at DirecTV, and Jose can expand on that as well.
Mr. Bixler, can I interrupt you just for a second?
Sure.
The chart of Exhibit 15 includes the growth numbers that you talked about. I don't see growth numbers on, or am I missing them? Are they somehow shown here on our Exhibit 15 also?
So I can answer that. On page 2 of Exhibit 15, you see the comparison in the second column, the increase in the population. It's 15 times from the first to the second, and it's 50 times from the first, and it's 3 times from the second.
Okay.
You see those?
Yes. Thank you. Go ahead.
Yeah, I think that concludes my piece.
Thank you, Mr. Bixler. Mr. Downey, would you like me to administer an oath or affirmation to the witness? Are you ready for that, or are you going to give more argument?
Yeah, can I just add a couple of comments to the credit interest?
Sure.
So the original audit report was delivered to DirecTV, and it included on the face of the report credit interest. And so when it was transmitted, we didn't recognize that there were embedded comments within that report because the numbers matched what we discussed, and there was credit interest that we had not discussed with the auditor. And the report was transmitted to headquarters. And we don't dispute. There was an internal embedded comment that said deny credit interest. And everything that Steve said is summarized in that. Okay? But that's the reason we're here. And shortly after that, because of all the delays with this, we said, we don't want to delay this any further. We'll file an appeal, et cetera. And we expected to do that. And then the waiver expired and all the other things happened. And so it got grouped in here. But in the exhibits, there are comments for discussions with the principal auditor where we know it's not an intentional overpayment. We know it's not this. there were some implied comments that the credit interest was denied because there was a whole lot of district tax schedules that needed to be prepared, and who was going to pay for them to be prepared? That's not appropriate. That's not a basis for denying credit interest. And if you look at the way this taxpayer's been treated over all these years, they have 99% compliance, reporting $1.5 billion in measure. That is significantly accurate. And when we look at and we'll talk about the exhibit that this Exhibit 3, or it's Exhibit A, the pages 315 to 316. It references a lot of things that go beyond anything that was said or discussed at the end of the audit, and that I think is the point that I wanted to make. So we'll deal with the rest of it as we talk to Jose. Thank you.
Thank you. Are you now ready to have me administer oath or affirmation? Mr. Manzano, would you raise your right hand, please? Do you solemnly swear or affirm that the testimony you are about to give in this matter will be the truth, the whole truth, and nothing but the truth?
I do.
Thank you. Who is actually going to be conducting the examination?
So I am.
Okay, you can proceed.
Okay. So, Jose, could you just briefly give us your role at Directv?
Yes, my name is Jose Manzano. I am currently employed by AT&T, who acquired Directv in 2015. My primary role is to assist in the audits of jurisdictions, state, county, and local. But I've also been involved in the use tax department in determining taxability of your purchases coming into our systems.
And Jose, how long have you been with Directv?
With Directv, I've been involved going back to consulting days from probably 2003, 2004. I started coming in on a regular basis as a day-to-day or a daily actually consultant in 2014, and in 2016 I became an employee of AT&T, which is basically post-acquisition of Directv.
Okay, and can you talk briefly about the growth of Directv and the changes in business models that impact, use tax reporting?
Yeah, obviously we're talking about going back to 1997. At that point, I think is when Directv was considered a startup company, and they were launching the direct-to-home satellite television subscription services. So obviously with that comes in different type of business models. There was a model where customers would actually go and buy their own equipment, the set-top box from your brick and mortars, Circuit City, Best Buy, and then we transitioned over into the customer being able to buy that equipment from Directv, and then we went to a lease model where we actually brought the equipment in-house, and we would charge the customer on a monthly basis. So there's obviously, with that comes the growth of expanding into multiple jurisdictions all over the country. So to the height of it, I mean, Directv got to having 25 million subscribers across the country, with compliance issues in jurisdictions, and you can imagine how many localities and state agencies.
How large was the tax department?
At Directv, when I started coming on a regular basis, altogether we're about 30 staff.
Okay. And so the auditor in Exhibit A asserts that there was no review of any use tax report. It just got remitted, and there were no changes or anything. What would you say to that?
That's not accurate. Obviously, with the growth comes the expenditure side of the business, where it's obviously noticeable that the sales tax that we pay to vendors and the use tax that was accrued becomes a major issue to review from the company perspective, because it does affect balance sheet and income statement. So we obviously the goal has always been to be as accurate as possible, but the size of the company obviously has its limitations. But there was consistent review of the systems. There was consistent review of setting up the proper taxability matrices for purchases coming in based on general ledger, and also on the accrual side, because as the growth of the company increased, so did our self-assessment of use tax. So in order to try and save that out-of-pocket expense, there was periodic review of all the use tax being accrued in the system.
So in this exhibit also, the auditor refers to some Delta software that was doing accruals. Is there software named Delta software?
No.
Can you elaborate on that?
Yeah, the Delta, which ironically was set up to try and capture additional tax as a result of prior audits. So the Delta is really the difference between the tax that a vendor charges Directv and the tax that our system determines is due. So if the vendor charges $100, but our system says we owe $150, that 50 is the delta or the difference that would be accrued within the system. So, and that was a program that was implemented as part of the ERP, which is at the time was SAP. So SAP, in conjunction with the way that the vendors submit their invoices based on the purchase orders and the general ledger accounts, would make the tax determination, and any difference that was identified is the delta.
So the auditor on that same comment says, the system automatically accrues tax per pre-programmed vendors without internal review. Does Directv have any software that reviews based on vendor?
No. The taxability determination of use tax at Directv and even at AT&T and many other large corporations is based on, it's in conjunction with other third-party software. Like, for example, we use Vertex. Vertex provides us the taxability of a particular description of a good, service, or product for a particular jurisdiction. So in conjunction with that, then our ERP system, SAP, merges with that determination, and then we pass that information along to the purchasing side. So once a particular transaction is contemplated and a PO is generated, then the general ledger is going to dictate the taxability based on destination of the product. So that's basically the automated portion of it. There is no such thing as we identify a vendor because we know they're always going to be taxable or not. It's really driven by the purchase transaction and the general ledger that is assigned to that particular transaction.
Mr. Denny, let me interrupt you just for a second, but just to remind you that you are asking questions sometimes which appear to be present tense inquiries, and Mr. Manzano is responding in present tense terms that this is what we do, this is what we do. Mm-hmm. I'm sure you both you keep in mind that we're talking about prior periods so that we're focused on what was happening at that time. Maybe Mr. Manzano was, in fact, talking about what was happening at that time, but you might want to clean that up a bit.
Yeah, thank you.
Sure.
I guess to clarify, everything I've been stating is what happened during that contemporary period.
Yeah, we're only talking about the audit period. All the comments are relevant to the audit period, not their current systems. Okay. And we're addressing these comments. These questions correlate directly to the representations that are provided in this document that was created some 3 years after the audit. Okay. I think we've talked about, not all use tax is the same. There's a lot of sources that you have. But I wanted to ask you, there's a comment in here, and there's been a lot of comments about the system just makes these back and forth adjustments in and out. And the auditor says there's an automated system of making adjustments. Is there any automated system of making adjustments?
No. Any adjustment that happened at the time during the audit period would have to have been reviewed by a tax member. A tax employee.
Thank you. So, does Directv maintain internal controls as a public company during this audit period for sales and use tax reporting and compliance?
Yes, I mean, as a public company, Directv did. We have, internal and external auditors on the internal control side. That the sales and use tax operation was part of the calendared items that were reviewed by our internal audit group.
Okay, and I guess my final comment relative to this is, so the auditor says in her final conclusion that there were similar errors in past numerous audits that lasted over the decades and continues into the current and into subsequent audit periods. The Directv audit permit, this account was closed December 31st, 2011, correct?
That's correct.
And that's the end date of this audit period.
Yes.
Okay, and the entity that it was merged into was audited for the subsequent period.
That's correct.
And it was a deficiency, correct?
Yes, there was no a net refund for that
Okay.
period.
So the auditor concludes that the overpayments are caused by overaccrual of use tax from DirecTV's failure to observe proper standard of care in reporting use tax. How would you respond to this?
That's just simply not accurate. I mean, the company's main objective, obviously, and from our perspective during that period, was to comply. And the systems implemented was to improve our compliance. So the issue obviously is the growth and the volume of transactions that came in through our AP system during that audit period was just phenomenal growth. So there was bound to be errors, but they were not due to carelessness. The company, again, really strived to minimize our out-of-pocket expenditures, and use tax is directly out of pocket.
I have no further questions. Thank you.
Department, would you like to ask this witness any questions?
No, thank you.
Let me ask my co-panelist, Judge Aldrich, any questions?
No questions for the witness.
Any questions?
No questions.
All right, thank you. And I have no questions for the witness. Mr. Downey, does that conclude your primary presentation? You have issue 3 you want to discuss still? How much time do you expect to take? Because, okay, all right, proceed.
All right. So the third issue involves the fourth quarter overpayment. So DirecTV made 2 prepayments for fourth quarter in November and December, and then reviewed the information and tax that they were reporting, adjusted, and filed a final return that was accurate and was substantially accepted in the audit. So there was an overpayment or an excess between what they had paid in as a deposit through the prepayments and the final return that they filed. Okay, generally, when this happens, I have it happen with clients all the time, ADRS calls the taxpayer and says, what do you want to do with it? Do you want us to send it back to you? Or would you like us to apply it to your next quarter? And we can just apply it to the next quarter. And we do that, and I've had clients where it's been a couple quarters because we've had things that have changed. In this audit, or in this situation with fourth quarter 11, the audit, or this refund, overpayment, was sent to the district, and they held the funds for 57 months, didn't ask a single question throughout the completion of the audit, and then when it was wrapped up, wrote a comment to send it back to Sacramento to pay the refund. And headquarters processed it as part of the final notice that you see as part of the exhibits in Exhibit A. And so there is lots of detail on these overpayments within the submissions that have been provided as exhibits, but that's the highlights, so thank you.
And does that conclude your primary presentation? Thank you. My plan would be to hold questions unless one of my panelists wants to ask questions now? Okay, they indicate they're okay with that. We'll hold questions until after the department gives its presentation, but usually before appellant will give its final rebuttal or closing. Mr. Noble, are you ready?
I am. Thank you.
You may proceed.
Appellant filed 3 timely claims for refund for the period January 1st, 2006 through December 31st, 2011, asserting that it overreported use tax on various transactions. The claims were verified by audit, which found deficiencies of tax of approximately $13 million and total overpayments of tax of approximately $14.9 million, resulting in a refund of approximately $1.7 million. As stated in the July 28, 2016 revised audit report, credit interest on these overpayments was denied pursuant to Regulation 1700, Subdivision B6B. Petitioner claims that the refund should include an additional $402,390, which represents overpayments of district tax to 3 jurisdictions that were offset against underpayments of district taxes to other jurisdictions. Petitioner also claims that it is entitled to credit interest on the refund amount. There is no dispute that the applicable statute of limitations to issue a determination for the final quarter of the claim period expired on August 13, 2016, prior to the September 28, 2016 notice of refund. As will be discussed in greater detail, the overpayments in dispute were offset against other district liabilities based on the court's holding in Sprint Communications via the State Board of Equalization. As indicated in Sections 7202, Subdivision D, and 7270, state, local, and district taxes form a uniform and integrated sales and use tax system, which are generally reported and paid by taxpayers as a single amount on a single return, and for which the CDTFA performs all administrative functions, including, for example, rulemaking, permitting, auditing, and collecting. When the CDTFA audits a taxpayer, it encompasses an examination of all of the taxing programs within its purview. Section 6483 provides that in making a determination, CDTFA may offset overpayments for a period or periods together with interest on the overpayments against underpayments for another period or periods. As we noted in the supplemental decision, under Section 6486, the CDTFA can and invariably does issue a single notice of determination to cover all the taxes a taxpayer owes for the period covered. Accordingly, the CDTFA may offset overpayments against underpayments of any tax covered by the NOD. With respect to periods that become time-barred in which to issue an NOD, in the Sprint case, the court, in applying the doctrine of equitable set-off, holds that the department may issue billings to offset an underpayment of tax against a taxpayer's overpayment in another reporting period, so long as the reporting periods are covered by a claim for refund, even though the statute of limitations otherwise bars the issuance of a timely deficiency determination for the same period. In making this finding, the court notes several key points based on well-settled case law. First, that a suit for refund of taxes is governed by equitable principles, and a taxpayer who challenges the validity of a tax may recover only if it can be shown that more has been exacted than equity and good conscience should have been paid. Second, that in making the equitable determination of whether the taxes paid were in excess of the amount due, the department is not confined to the isolated transactions on which the refund is based. Instead, a refund case throws open the taxpayer's entire tax liability for the period in question. And third, that while there is no statutory basis for permitting the department to set off a tax deficiency against a refund due after the statute of limitations has expired, the broad equitable principle that a taxpayer is not entitled to a refund unless they have in fact overpaid its taxes nevertheless allows for such set-offs. There's nothing in Sprint remotely indicating that such set-offs cannot be made between the numerous districts and local taxes administered by CDTFA. In fact, the assertion that appellant should be able to retain any overpayments, despite the existence of underpayments in any of these integrated sales and use taxes during the same period, is directly contrary to the equitable principles underlying the decision in the Sprint case. Consistent with Sprint, appellant's claim for refund throws open its entire liability for the period in question, and appellant is only entitled to a refund to the extent it actually overpaid its taxes. Therefore, offsetting appellant's overpayments in some districts by its underpayments in other districts was clearly appropriate under Sprint. Appellant's position in this appeal is directly at odds with its arguments regarding the department being a fiduciary that administers the tax under each contract with each individual jurisdiction. The CDTFA is acting as a fiduciary in ensuring that each individual jurisdiction receives the tax revenues to which it is entitled for the period at issue. The department is not using the funds of one jurisdiction to benefit another, as appellant alleges. The funds at issue are overpayments, and regardless of the outcome in this appeal, will not remain with the three districts that receive the overpayment. The issue here is whether appellant should retain the payments at the expense of the districts to which it was underpaid during the same period. And again, under Sprint, it should not. A taxpayer is only entitled to a refund to the extent it actually overpaid its taxes. Former annexation 802.0090 similarly conflated the separate issues of offsetting between local jurisdictions and districts and offsetting between a taxpayer's underpayments and overpayments of tax. While the backup letter mentions Sprint, the actual conclusion in that letter appears to broadly conclude that overpayments in one local jurisdiction or district can never be offset against underpayments in another. Even to the extent it meant to limit this conclusion to Sprint offsets, such a conclusion is incorrect for the same reason that appellant's arguments are incorrect here. As I've already discussed, that each local jurisdiction and district must receive the revenues properly due is actually supported by the department's ability to offset a taxpayer's underpayments and overpayments. As an aside, the annexation essentially provides that the department must actually allocate tax revenue to the jurisdiction where it is properly due, and vice versa, that the department cannot make allocations that is to the detriment of other jurisdictions. The annexation was never intended to address refunding overpayments in one jurisdiction when underpayments exist in others. This is why the annexation was a local and district tax annexation rather than a general sales and use tax annexation. In summary, Section 6483 and the Sprint case allow the department to offset appellants' overpayments of district tax with underpayments in other districts. I think the court summed it up best when it stated that Sprint, in seeking equity by requesting a refund of taxes, must be prepared to do equity by allowing its tax liability for the same period to be corrected because of errors through which it has profited. Similarly, appellant cannot seek the equity of recovering its overpayments while attempting to avoid the equity of its underpayments. With respect to credit interest, as relevant here, Regulation 1703 provides that no credit interest will be allowed where the overpayment has been made by reason of carelessness. Carelessness occurs when a taxpayer makes an overpayment as the result of a clerical error, such as including receipts for periods other than that for which the return is intended, or failing to take allowable deductions, and the overpayment is made after the taxpayer has been notified in writing of the same or similar errors on one or more previous returns. Audit Manual Section 0217.13 provides some examples of carelessness, such as knowingly overpaying the tax liability, recurring overpayments caused by clerical or computational errors in in audit situations where there is a net refund, but a negligence penalty would have been assessed if there had been a deficiency. And lastly, where there are overpayments caused by repeated errors in similar transactions. Appellant was previously audited for the period October 1st, 1997 through September 30th, 2000. The April 7th, 2004 report of field audit, which has been provided as Exhibit G, shows a total refund of $810,000 for use tax accrued and reported in error. The verification comments note that the overpayments result from the accounting department erroneously accruing use tax on non-taxable labor, periodicals, and construction contracts in an effort to correct errors found in a prior audit. In addition, appellant filed a claim for refund for that prior period dated May 19, 2003. This means no later than May of 2003, appellant knew that it was over-reporting its use tax liabilities, and on or about April 7, 2004, appellant was notified in writing that it was over-reporting its use tax liabilities. Turning to the present present period, as summarized in Exhibit A, pages 315 to 316, audit staff found that approximately 95% of the refund was due to over-accruing and reporting use tax in error. For example, Audit Schedule 12H, which accounts for approximately 82% of the refund, resulted from appellant accruing use tax on exempt services and a property that was shipped outside of California. Audit Schedule 12F's overpayments resulted from continuous over-accruals and under-accruals of use tax that ended up as net overpayments. And Audit Schedules 12I and 12J result from reliance on their accounting program. Audit staff found that the software was set up to accrue tax on full invoice amounts, even if the invoice was only partially taxable. Audit staff also found that appellant did not internally review or monitor how the program taxed various invoices. Even if as alleged by appellant that an employee made adjustments, we note that the continued debits and credits to the use tax accruals are the same issues seen in the prior audits. Lastly, according to Audit Schedules 12D and 12E, which represents about 3% of the overpayments, those resulted from unclaimed tax-paid purchases, resold credits, and excess tax reimbursement that ended up being refundable to appellant, which was carried over from a prior audit. In short, Audit Schedules 12F through 12J show that the overwhelming majority of the overpayments in the current appeal result from accruing use tax in error on non-taxable transactions and continuously adjusting some of those accruals back and forth in an effort to correct them. Furthermore, the fact that appellant adjusted the use tax accruals back and forth showed that appellant knew it was not accurately reporting its use tax liabilities. This establishes that the overpayments at issue occurred because of recurring clerical or computational errors, and thus the overpayments were the result of carelessness. These errors are similar to the errors that occurred as far back as the audit period ending in September of 2003. Therefore, appellant is not entitled to credit interest for this appeal. Thank you.
Thank you. I'm going to open it up to questions from my co-panelists. Judge Aldrich, do you have any questions of either party?
Hi, yes, this is Judge Aldrich. I have a couple of questions, and this is for appellant. Regarding the chart for Exhibit 15, there's 3 separate periods, and I believe the witness indicated that there was a shift in business models. One where they could purchase from a third-party retailer to Directv selling directly to the customer, and 3, there's leasing of the customers. So to be clear, the 3 separate periods, do they correspond with the changes in the business model, or I guess at what point did those occur?
So I think we reflected some of those change on a prior chart earlier, and I think they transitioned to a free somewhere around the end of the 2000 to 2005 audit, and then during this period they transitioned to a lease model, and part of the tax due was relative to the lease of the boxes to customers who were using them. So some of those changes occurred at the tail end of the 00 to 05 audit, and some of those changes occurred in the middle of this current audit.
Thank you. And then back to department. So the department's position regarding same or similar errors, could you, I guess, so it sounds like the errors are similar in the sense that they're use tax, largely, or?
To a certain extent, they're all related to use tax, but I look at the audit that ended in 2000, and we're seeing accruing tax on exempt services, like non-taxable labor or periodicals and construction contracts. And I look at Schedule 12H in the current audit period, so see line items for accruing tax on services such as translation services or other things that are also non-taxable. So when seeing those, that's what I believe audit staff and myself saw that appeared to be similar.
Okay, thank you. I'm going to refer back to Judge Geary.
Thank you. Judge Akapchikian, do you have any questions for either party?
I have a quick question for the department. Does the percentage of error factor into carelessness in the department's position?
I would say it's not a bright line rule, but it would be one of the factors we would look at. And then I would note that while the refund amount in the current audit period went down to $1.6 million compared to the $5.5 million in the immediate preceding audit period, the actual total refund was $14.5 million, representing a measure of approximately $165 million. The refund amount went down because of the underpayments that were around $13 million.
Thank you.
And I have no questions. Mr. Danny, are you ready to give a final short rebuttal?
I said, I don't know I do anything short, but I'll try to be short.
All right, thank you.
All right. First, the department presents this issue one as us filing a claim and trying to ask for some money that wasn't due, that was due, but we don't want to repay. That's not the case. The claim for refunds and the overpayments that were in this were documented during the audit process, why the audit was in process, in working with the auditor. Okay, so there was nothing that was us filing a claim trying to sneak something past somebody. So the presentation of that is a little bit backwards. It started with the audit and the extensions that were provided by the taxpayer. They raise an issue of integrated sales and use tax. There's no concept of an integrated sales and use tax. If you look at Sprint discusses tax authority. It's undisputed that each district represents a tax authority that has adopted its own set of statutes, its own set of rules, its own Section 6483, equivalent to that of the state. And then the second thing is the department has, and I'm not an attorney, I'm an accountant, but where's 6483? The department references 6483 is providing them the ability to do this unrestricted offset between whatever, it throws everything open, etc. So 6483, first thing, predated Sprint. So if that's the case, why do we have a Sprint? If they can just do whatever they want, whenever they want, why do we have Sprint? So 6483 is actually in the deficiency determination section. The periods are time barred. There is no deficiency. That ship has sailed a long time ago. And if you look at what 6483 is saying, what 6483 is saying is it's addressing a cumulative audit report where they audit a client for 4 quarters. Okay? In the first quarter, they overpay. And they pay interest on that amount for that quarter and the next quarter. And then in the third quarter, they underpay. And it absorbs the entire overpayment and the interest on the overpayment. And now there's starting to be an underpayment, and there's starting to be interest calculated on that. And it's basically saying that you can aggregate all of those periods together in one notice. You don't have to send them the refund and then go collect their payment. You put them together, you offset them. And it starts with, in making a deficiency determination. We're not making a deficiency determination. There is no basis for this to provide any offset to this audit. And you will note in reading 6483 that it says, may offset overpayments for a period or period, and I'm going to skip the interest, against underpayments for another period. Not the same period, with the interest and penalties that apply on that, just as I explained. An audit where 1 quarter is a refund and 1 quarter is an assessment. You can aggregate those together, and if you look at the report, that's exactly what they do in a cumulative interest. This section is not talking about you don't have to consider the statute of limitations or that time-barred periods aren't time-barred. So, we seek a refund to tax authorities and jurisdictions where we've overpaid. Okay? We do not seek a refund. We have not sought a refund and don't have a refund. And if we did, we've offset it in every other jurisdiction where they set to issue a deficiency determination under the state statute when they should be looking at the district statute because they have an equivalent 6483. Those are separate. There's two sets of statutes. There's not one statute. There's not one 6483 that applies to everything. With respect to credit interest, not all use tax is the same. We report on a lot of different things. Notice, giving you a report that pays you a refund doesn't, to me, fit the bill of giving a taxpayer notice that you're going to deny interest or that they need to do something or they're doing something deliberate and they need to correct it, etc. Notice would be, you'd be aware that you were issuing notice. Okay? The 1997 to 2000 audit was raised on March 18th of 22. We filed our claim in 2016. It's the first time there's any reference to, oh, we gave you some notice in this other period. So I think that's disingenuous. I think when they look at the summary of recap, it's you over-reported use tax, and this is use tax. I know in 97 to 2000, they reported on the Directv TV guide, okay, their newsletter. They didn't recognize that that was a periodical and that it was exempt from tax, and that represented a significant portion of that audit. Okay, the creative art things or the giveaways or things that they relate to how we acquire customers, and that changes all the time. From 2000 to whatever, we've had 100 different programs of incentives we provide to acquire customers, and so these aren't clerical errors as referenced in the audit manual either, or in the other where someone just added something wrong and paid an amount and you put 10,000 instead of 1,000. These aren't clerical errors. They're not of the nature of that. I think that's all I got.
Thank you, Mr. Downey.
Thank you.
Mr. Downey, does your client submit the matter?
What was it?
Do you submit the matter?
We do submit the matter.
All right. Department, submitted?
Yes, sir.
This case is submitted on February 16th, 2023 at 2:33 p.m. The record in this matter is now closed and this hearing is now concluded. I want to thank everyone for participating today. In the coming weeks, the panel will meet to consider the matter and OTA will send you a written opinion within 100 days. This also concludes OTA's afternoon calendar for today.
Thank you.
Thank you
Thank you.
all.
Thank you.
Get home safe.
We can stop the stream.